All right, hope everyone's doing well. Wanted to make a video, just kind of intraday, changed up a little bit. Once again, my new goal is 10 to 15 minute segments of videos. So that'll probably mean, more kind of shorter examples. It's obviously probably makes it more interesting to begin with. So coming into the day, really two things. Gap up. And you can see right here, I don't even really remember what's to the left, but most importantly is we're always in long. Someone asked about if you have a gap and a breakout, it doesn't matter. I could do this, or I could look at this and say, okay, it's the same overall idea. So I don't care. All I know is sideways, we had a bull breakout. This is a strong enough breakout. Odds are we'll get a second leg. Plus consecutive bull bars, even though they're small, it's confirmation that's a follow through. Therefore, easy thing to do typically, and you could really do it on this close. Even if we got a bear bar down here, it's probably not going to fail. It's a strong enough surprise you'll get a second leg. So you could buy here, and such a tight channel, no reason to get out. And even here, we're just touching the moving average. We hadn't touched the moving average since 7:35. It's now 9:05. That's what, 18 bars, give or take. So it's basically almost 20 bars. So you can expect price to touch the moving average, but it's a tight enough channel. First reversal down is going to fail. Traders will buy it. So again, I prefer the day session. So this is what I would look at. But either way, strong enough gap up. 20% chance this bar would fail. Didn't even trigger, so I wouldn't sell below it. Consecutive bull bars you can buy, but again, we'll probably reach the moving average. The most probably important bar of the day is 9:05. It's a big outside up bar. And if you think about the logic, it's one of those bars where 9 o'clock, typically 50-50 chance you've seen the high or low of the day. You hear I'll talk about that in this video course. However, this bar is so big that you have to ask yourself this typical scenario. Let's say I buy the close of the bar. If I buy above it or the close, my stop's here, target's here. So 1 times my risk is all the way up here. What's more likely? That we go all the way up here or that we test down here? Well, it's that we'll test down here. It's the same concept of, either this breakout to the upside or, this bear bar, this bear bar. At some point, it's climactic and you expect a move in the opposite direction. So if you sell here and put a stop, if you sell here, put a stop up here and target down here, that's kind of crazy because it's consecutive sell climaxes here, 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 and here. And each sell climax increases the odds of 10 bars and 2 legs and a test to the top of the sell climax. So just like here, I don't want to buy this because number one, well, a few reasons. One is, let's do it like this. One being that it's a gap up, and I think we're going to test down here. If I look at the 18 bar range, we hadn't broken above it, so odds are we're going to either go above here or go below here at some point. But mainly, it's 1, 2, 3, 4, 5 consecutive bear bars. So yes, it's a 20 gap bar buy, but it's stop placement is difficult. If I put a stop, do I buy above this bar and put a stop here instead of target here? No, it's pretty poor risk reward, and the probability is not 60%. Therefore, the really only reasonable thing I can do is I'd have to buy, maybe I buy here or buy here, somewhere in this area, maybe buy above this bar like this. And, maybe, and I don't even really know how great of a trade this is. Let me just do this like this. Maybe I buy here and set a stop. If a logical stop is here, but it's a trading range, maybe I want to double it and put it down here, and maybe I buy more at this low, but then management becomes an issue. So overall, this is not a great stop entry day or an always in day. It's very difficult always in trading day. If you buy this close, put a stop down here, you almost get stopped out on this bar as it goes up. If you sell down here, you're underwater. And even here, we had a bear breakout, a bear flag. If I can delete this. There we go. So at a bear flag, we've got the bear breakout. You know, 50-50 chance in general that the bear breakout fails and we reverse up. I think the odds are strong enough we'll get a second leg down. And I really ultimately think we're going to fall below this bar. But either way, look at the day. Right now, we're basically 3 hours into the day, and this is what it looks like, you know. Very disappointing bar. So, and it's a weekly, you know, actually it's yesterday. So it's a weekly, trying to think what I'm trying to say here. It's Friday, so it's the end of the week. So you have to be thinking how we're going to close. We're close to the high. So I don't think we're going to go far. I mean, you know, even if you look at just the midpoint of this bar, you know, it's at like 39. So I don't think we're gonna fall, you know, 20 points, give or take a few points, in, you know, by the end of the close. That's just, I don't think that's realistic. That also leaves out a test down to here. So where do I think we're going to go? Sideways. It's the midpoint of the bar. If you think about it, you know, look at it. This is kind of a good example. Look at this bar right here. So the bulls wanted a close all the way up here. And what would be disappointing? Well, it'd be disappointing to make the bar have a tail. Or kind of like this, you know. If it's up here, let's say even on a Thursday, it's up here. Well, if it sells off all the way down here by Friday, or the close of Friday, less and less traders are going to be willing to buy above it. Makes it more confusing. And you see that on every time frame. You know, we could look at this bar. You know, on one hand, you always have to wonder, and by the way, this could be exhaustion, so I'm not advocating, you know, if I had to do anything, I'd probably wait for, just to go ahead and say it, I'd probably wait for one more close up here and buy and put a stop down here. Preferably a close even up here. The bigger the better. It's still possible we get the measure move up. You know, this might be a strong enough test down to convince traders that we tried to fall below it. But again, I'm not fully convinced. What I was going to say though was if this bar would have maybe closed on a tie, you know, all the way up here, that would have possibly made traders more willing to buy it. But with the big tail above the moving average, poor price action to begin with, makes it a little more difficult. Makes it a little more difficult. So that's pretty much that day. Let me look at a few more markets. I'll look at the overnight session real quick. So kind of overnight with a breakout, looks like it's probably exhaustion. So we've been rallying since 1400 or 2 p.m. on Central Time, rallying up, broke out to the upside. You can argue bull breakout of a bull channel. We reached the measured move target. In general, when you see a bull breakout like this, the odds are you will get a second leg up, which we did. But it could also be exhaustion. Now, one thing, when you see a bar like that, some traders will immediately just sell and use a really wide stop. That strategy is difficult. It works, but it's fairly difficult for the simple fact of, if you remember back to yesterday, I pointed it out in the prior video. If you buy here, clearly you can buy and scale in and make money. But if you buy, stop placement's an issue. You know, where do you get out? If you buy here, put a target down here, and say your stop, you know, if you buy here, put a target up here, and say your stop down here, you're basically buying a few ticks below yesterday's low, which is buying into support. That's like, I don't know. It's kind of like, that's comparable to getting out. I don't have a good example, but it's kind of like getting out below this bar. It just doesn't make sense. So back to the NQ. when you have this breakout and you have this second leg, in general, after the second leg, odds are much higher you're going to test down. But often what happens is you have to go sideways for many, many bars. So if you're willing to wait, 15 bars, 20 bars, you'll become more confident. Think about the logic. Okay, traders see this bar. I think we had something happen. Let's just take a look at it real quick. Nope. Nope. I was looking at the price and it kind of shot up a little bit, so that's more just curious. Either way, if you sell here, a lot of traders will sell and just take their profits during this bar. Most traders that sell this close are looking for a scalp. They know price has to go sideways for 20 plus bars, then retest, and then start to sell off. Over here, we had what looked like the bulls wanted a bull flag. Ultimately, they got a bear breakout below the bear flag and a potential measure move down. And then they even had a stronger breakout here. First reversal to fail, but it was a fairly deep pullback. So let me go ahead and I'll take a few more minutes. We'll look at some stocks real quick, just intraday. Apple's a great day trading stock in my opinion. I think the NASDAQ overall moves pretty well. Same thing with you can trade the NQ. I know a lot of people like to do that. Apple, big bull bar, probably always in long on the open. However, this is a class. This happens all the time. Look at the tail on this bar below. So you have to be careful. If you buy here and put a stop 50%, you would have gotten stopped out. A lot of traders, they'll see this bar and they'll say, hey, it's a big bar. I'm going to try and buy 50%. And you can see they bought 50% right here. You could also argue, it's 50%. That didn't really quite work. Either way, always in long bar one, then we get consecutive bull bars going higher. So maybe parabolic one, pullback two, pullback three. Bulls probably don't have to get out, probably gonna go sideways for many bars. I'd get out below that bar. It's 3 pushes up, 1, 2, 3. More importantly, we hadn't touched the moving average all day. We're gonna touch it. Amazon. Another kind of pretty good example of very big bar, big risk. So traders may end up selling the bar. It went up a little bit, but ultimately went below it. Facebook, another good day trading stock. Yesterday, great example. I don't remember if I showed this, but we had a big gap up in a doji. And everybody knows the odds are incredibly high. I say that the odds are pretty high that price will fail above the bar. So anybody buying above it is going to scalp, which means sellers know that and they're going to sell the high and they'll sell 50 cents above. However, I don't know the price. I forget the price, but it's these are basically $2. So they'll sell maybe $1 higher, $2 higher, betting that price will go down to here. And one thing people will often do, at least I think they would, it just makes sense, is you do this. You say, okay, there's a 20% chance this is the low of the day. So if I sell above this bar and put a stop somewhere up here, maybe a little bit higher, and this is kind of one of those things where you may, realistically, and this is kind of the hard thing about it, you might be better off using a stop up here, but you could probably do it just fine. You could sell here, put a stop somewhere up here, and you'd exit if this bar was just a big bull bar. But you sell, then maybe you sell $1 higher, and you take all your profits at the low of this bar. Or, if you see this bar and realize what's going on, maybe you stay short. Either way, you don't have to do that. I think that makes things a little bit more confusing. It makes it a little bit more confusing, and I'm a big advocate in just keeping things simple. Always in, stop. Always in should be everybody that studies out, which should be the people that are listening to my videos. Anyone listening to my videos should learn always in. It is kind of the bread and butter to Al's methodology. It'd be, if Al had to fall back on a trading system, it'd be always in. It's how he scalps. He just does a few things in between. So if it was always in, you don't buy above here. Consecutive bear bars, maybe you sell this close, stop up here, first reversal should fail, second reversal. Maybe you get out above that bar and then, you know, maybe you go long here, here, here. Then you have 3 pushes up, 1 pullback, 2 pullback, 3, 50% pullback of here to here. So we also basically closed the gap. I don't know if we actually did, but you know, maybe close is close enough. Looks like a bull leg in a trading range, probably get a bear leg in a trading range. How do you get out of shorts below that bar? Excuse me, I get out of longs below the bar. Aggressive bears will sell. Maybe they'll sell this close, but rather low in the range. If they did, probably hold long but hold short above the bar. Take profit somewhere down here. So now we have a bear trend line break, and a few legs down, probably forming a trading range. Fairly tight channel, and really went sideways the rest of the day. You know, same thing over here. No real decent stop entry. You can buy here, but it's a lot of overlap. Then we got a bear breakout. Odds are this will fail and we'll test back into this range. So might be a strong bear breakout. You know, strong enough breakout. I do think we'll get a new low. But either way, I don't think we're going, you know, I think we're going to go up to, you know, we're going to go back somewhere in the middle of this trading range. At least I think we will. The odds are we're going to go back to the middle of this trading range before we go way, you know, somewhere down here. I'll look at Tesla. Last chart I'll look at, because we're at the 15-minute mark. So here's the start of the day. So big tail, you can sell it. You know, is it always in short? I don't know. Consecutive bars, but big tail. So not really a great sell, and may get a deep pullback, which you did. Now here you get a second entry short. You can call it a double top and then a second entry with this, you know, low 1, low 2. Incredible short. If you didn't sell here, maybe you sell here. 3 consecutive bear bars, maybe you sell. You know, we got the measure move down. Big bear bar, big follow through bar, then a tail. And then you get this really big bull bar. Probably, you know, 50% of strong moves on the open fail. You had a tight trading range here, so probably will try and close the gap. If I'd probably get out above the bar. Probably going sideways. You always have to kind of be suspicious. 1, 2, 3, 4, 5, 6 consecutive bear bars. 2 really big bear bars. So if I did hold short above, I'd be getting out in here. I think the odds are we'll go sideways. Plus, I'm sure we have, you know, over here. So this is kind of why it's important. Just zoom out a little bit. You know, when I look at this and I think, you know, wow, we have to be going lower, but then I see, wait a minute. You know, are we really going that much lower? We barely broke below this low. We broke below with the doji. Okay, maybe this is a sell vacuum, which it was. So I think the odds are we're going to get back up to here, and you know, we're obviously in a trading range, but I think we're going to close these gaps. All right, thanks for watching.